let's say you're sitting on a lot of extra cash, and you haven't invested it yet, just because the stock market feels risky. It's at all-time highs right now. Things going on around in the economy, stock market, news, so on and so forth, that would cause anxiety about putting money, especially from cash, into the stock market. So kind of what's happened with interest rates back in 2022 when the Fed had their fastest rate hiking cycle. I like to draw it as an X. If we had a whiteboard in our conference room, I'd draw it as an X, meaning that we had a period of time where the Fed raised interest rates extremely fast. And generally, interest rates and bond prices are inversely correlated. So what that means is as interest rates decrease, all things equal, bond prices go down. Because the thought is, if I have let's just say a 1% bond back whenever interest rates were low, and now all of a sudden the market is issuing 5% bonds, who's going to want my 1% bond anymore when they can go to the market and go buy a 5%? So I have to discount it to a point where it's equivalent to getting a 5% bond. That's why bonds can lose price, can lose value. Now, on the other side of that, now all of a sudden we're at a higher interest rate environment and rates are about to decrease. So if I have a 5% bond, 2 years from now, the market's given 2 or 3% bonds. Heck, everybody's going to want my 5% bond because they can't get that anymore. So now all of a sudden, bond prices can increase in value because you can't get that good of an interest rate anymore. So the theory here is, as rates decrease, cash becomes less attractive as a long-term investment, like you said, Miles. But there are other ways to invest without taking as much risk as in the stock market by some sort of bond portfolio. Now, there's a million different types of bonds out there, but you can take a smaller amount, an incremental amount of risk to say, hey, let me buy some bonds as rates decrease to have the potential to get better return than just your cash sitting in the bank. So that's just a way, if you're sitting on excess cash, just to reflect and think, how do I want this money to look 2, 3, 4, 5+ years from now? If it's you're trying to go after better return, look towards taking a small amount of risk, get out of cash into some sort of fixed income type of investment. But like Miles said, if it's there for an emergency fund, if you're going to be spending it inside of a year or two, keep it in cash.
Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.